how could we create a platform or a solution which really serves the merchant fully by aggregating or working with multiple platforms, with their online marketplaces, on-demand marketplaces, payment service providers, whoever. We figured that cash flow itself is powerful enough to power a credit model. You don't need to know the assets of the owner and P&L of businesses who don't actually know what their P&L is, because these are micro small businesses. We are a fee only product, and that too is a single time fee, because the technical structure of the product is trading rather than financing that bears interest, late fees, and any of that stuff.
I love Manila. When I was first sent there for work, I got the sense it was the Johannesburg of Asia, a city that most people only go to somewhat reluctantly and only when their work tells them they have to. And sure, it does lack the golden temples of Bangkok, but like Johannesburg, it's really a great place. One thing that really is terrible, though, is the airport, or at least the getting from the airport to the city. I think it's only 6 kilometers from the airport to the center of Makati, but it once took my wife and daughter about 2.5 hours to do that trip at 10 a.m. on a Friday morning. And the traffic is only one small part of that problem. The main problem was always getting a taxi. You would come out the airport and there would be a huge queue, maybe an hour you're going to be standing and waiting, all because the taxi drivers would park outside and then come in and haggle for prices in the queue. It paid them to have a long and painful queue because people would pay over the odds to get out of it. And then Uber arrived, and the first day it did, it completely changed the travel experience. You'd walk out the door and pretty much straight into a car. Not only that, but the car and the driver were generally of a higher quality than you would experience in the normal taxi queue. I'm not lying when I say that that improved my travel experience more than any hotel upgrade ever could. But when we're talking about ride-hailing in Asia, Uber isn't really the go-to name. It's all about Grab. Welcome to How to Lend Money to Strangers with Brendan LaGrange. Ritwik Ghosh, co-founder and CEO at Seedflex. Welcome to the show.
Thank you, Brendan. Thanks for having me here.
Oh, it's a pleasure. Ritwik, accelerating financial inclusion has been an ongoing theme in your career. And that's true even before we get to the two main talking points of the day. So we're going to be talking a lot about Grab and a lot about Seedflex, but you have also worked for some very familiar names to those of us in the industry in both credit cards and consulting. So before we get to the meaty part of our discussion, what was the foundation of your career in lending?
Yeah, all of my career has been in lending in some sense or other. I started this journey with Capital One Bank in US. Capital One was the original, data disruptor in credit. And then from Capital One, I moved on to Oliver Wyman, which is a consulting firm known for fairly deep analytical work in areas of risk. Lending or credit is a personal matter, right? And in my own life, growing up in India, I hugely benefited when I got a student loan from one of the banks, which paid for part of my education. And I felt dearly privileged for that. And when I moved to US, I realized that's quite usual. It's embedded into your education. It shouldn't be such a privilege. And that access and empowerment has always stayed with me.
When done right, it really can make a huge difference to people's lives. And when done wrong, can cause a lot of damage. So we really do want deep thinkers to get involved here. And it's great to see, obviously, now a lot of technology helping that as well. So it's not just, one route in for everyone. And if you don't have the data, you don't get in. We'll talk a bit later on how you're using new data sources and such to free up that growth potential for more. But first, if we go back in time a little bit, around 2009, so now 15 years ago, it's hard to imagine, but 2009, Uber was formed, and it took a couple of years, obviously, to bed itself in the US, but then it started to expand around the world. At the same sort of time, 2012, what's become known as Grab today was founded in Malaysia. Not to make rides more efficient exactly, but it was to make taxi rides in Malaysia safer through, I imagine, sort of increased accountability of the drivers and more user control of who's coming to pick you up. I haven't got any real memories of taxi drives in Malaysia, but I took a lot of taxis in the Philippines and in Thailand at that sort of time. And you really did get some very sketchy vehicles and very sketchy drivers from time to time. So I can imagine how that was seen as necessary. Now, I don't know if it's because it had that slightly different purpose at the start, but while Uber has expanded, it expanded into adjacent transport bookings and deliveries. Grab has grown also into adjacent transport bookings and deliveries, but a lot more than that. It's a genuine super app now with messaging, but most importantly, with financial services incorporated as well. And that's where you come in. So, Ritwik, talk to me about your time at Grab and what your responsibilities were there.
Yeah, as you rightly said, Brendan, there are some parallels between how Uber came into being and how Grab came into being. But there are some important differences. And having been with Grab for more than 5 years until I left last year, it's a company with very deep social mission and a very clear vision that is linked to uplifting micro entrepreneurs in Southeast Asia. And as you'd be familiar with many of the micro markets within Southeast Asia, it used to be a largely cash economy with very low penetration of different modes of electronic payment, say 10 years back, when slightly around the time when Grab started. And lending or credit remained unavailable. So when Grab went into mobility and delivery, the founders realized shortly after that they are only scratching the tip of what services Grab can provide. Given the huge gap in digital payments, huge gap in digital lending, insurance, embedded finance just came naturally as an opportunity and also as an opportunity to serve the drivers and the merchants and consumers better. So that was the origin of sort of financial services thinking for Grab.
But it's also seemed to fill a much bigger role in people's lives, even before it grew into this super app, even in the early days. It seemed far more inherent in day-to-day lives of people than Uber is for most of us. So I'm making a lot of general sweeping statements here, but if I think about how I use a taxi, it's occasionally to get to an airport or a train station, or if I'm in a new city, to get around a little bit. Whereas with Grab, it seems that people used it far more to get their life done. And, its treatment of its drivers, the way it saw them was far more as entrepreneurs, as business owners. And those sort of two sides together made it immediately quite a big force. Now, it is a while ago, and I don't know if you still remember, but what are we talking about in terms of scale?
So in the region across 8 different markets, it is by far the largest ride-hailing platform, largest food delivery platform, and one of the largest digital payment methods. And in fact, the embedded lending business that I joined to build and scale is the largest embedded fintech lending business in Southeast Asia. So it's publicly disclosed numbers, 4 million plus drivers, 1 million plus merchants who offer their services on Grab, and 40 million plus consumers who use Grab on a regular basis. So, and as you rightly said, more than sort of an app that you use for a specific purpose, it is embedded into the daily life of people here, whether if you're offering your car as a service and you're a driver or you're a merchant or you're a user, and maybe you're both sometimes, right? You may be the merchant and you may be the user, just at different points in time in the day.
Yeah, and let's dive into that lending side of things, because obviously there's this huge story on the transport side, but your role was in lending. What did that look like? So we're talking now, I guess, primarily about lending to the drivers, a population that really would have had very little data available to them in the traditional credit scoring sense, very little access to finance. How did you suddenly open up this market?
I'll talk a little bit about my journey of how Grab happened, right? It wasn't a well-planned transition in any sense. I was a happy consultant for most parts, having done it for 10 years. In fact, Grab was one of my last clients that I served. And at that point, this is 2017, Grab was just about thinking of what to do beyond payments in financial services, right? What would be those businesses to build? And we realized that the segment of drivers are unserved, underserved, unbanked, underbanked, whichever ways you want to describe them. However, as a platform, Grab is in a unique position of knowing their actual income pattern in the past, how many rides they have done, how many hours they have worked, and there is a huge amount of analytics that you can do, predictive modeling that you can do, with which you can project that income going forward, whether that's due to the macro factors like seasonality or micro factors like drivers' own lifestyle and preferences. So we took all of that information as a basis for creating, credit variables. And based on that, we provided what essentially is like a unsecured lending facility, a cash advance in most markets. And there were a few other different variations. And it was not only that we gave credit on extremely affordable terms in a great experience with pre-approved nature, but we also allowed the drivers to pay back every day when they earn their income. So rather than this traditional structure of credit where you're given a lump sum amount of money and you're treated like a salary earner who gets paid on 28th of a month, so on 29th you pay back your loan. Drivers are not that. They earn every day. That's why we call them micro entrepreneurs. So this fractionalization of repayment and automation of it was a huge value.
Yeah, it's such a good example of thinking about the customer when you design your product, but also such a perfect timing, I think, to move into digital and then immediately be able to use that data, because these drivers would have taken cash in and paid cash out every day. Very little of that would have gone through the bank. So solutions like open banking wouldn't really work. It was only because they were operating through the Grab platform that you had access to these insights that used to be cash transactions are now digitized transactions. And suddenly you've got this unique view of how the business side is running with no extra work for the micro entrepreneur. You're not saying, please give me statements from the bank. You're not asking him to create accounting books and things that would be, a big burden. It's literally just happening in the background. A fantastic example of what a super app done well can bring to the market. It's spoken about all the time, but it seems that very few places have got it right. We've got like the two big ones from China, but outside of that, Grab is one of the few examples that have done it right. And it's interesting to hear that this is built around helping the various people that are involved in the ecosystem improve their lives, rather than a more cynical approach of saying, let's build a super app. But as you said, you're not at Grab now. About 7 months ago. In fact, it was between when I first reached out to you about an interview and when we finally booked this one. You left Grab to start Seedflex. Seed to grow, flex to repay.
I'll start with the Grab story because that's where this all started. My co-founder, Seedflex, Solveig, we were partners at Grab. So I was heading the business side of things, and Solveig comes from a data science risk management background. So he was the head of risk, right? And we two were part of the team that started the business, scaled the business. So the driver side we talked about. Now there is a second part of the business that we started building with Grab, which is the merchant lending business. The basic principles are similar. Merchants with the platform have earnings on the platform and payments from the platform, right? However, the key difference between the driver segment and the merchant segment is, whereas in the driver segment, they're generally one platform, or at least in Southeast Asia, Grab's very dominant. So the credit that we could give them satisfied their needs. It was fully reflective of their earning. In a merchant case, you're selling only a fraction of your total sales through any one platform. You're also selling in store, you're selling online. You got 5 different ways of selling, right? Merchants are never with one thing. So when we built a similar product, which is a variation of merchant cash advance, again with fractional repayment, it serves the merchant but partially. It can't really appreciate the full flow of the merchant. And that's where me and Solvik, we started thinking of how could we create a platform or a solution which really serves the merchant fully by aggregating or working with multiple platforms, with their online marketplaces, on demand marketplaces, payment service providers, whoever has a view of the cash flow of the merchant. And that's the initiation of Seedflex, trying to build that aggregated platform agnostic solution which is open to work with different partners.
What does that look like when we talk nuts and bolts, when we talk product?
So the product is essentially that the historical sales patterns, when you look at the granular sales data or payment data, which is settlement data, and that leads you to a bunch of cash flow variables that you can generate from that aggregation. And then you can characterize that cash flow based on another set of variables, which are, say, diversions from expected cash flow, peer group divergence and such. You get a very rich set of credit indicators, which are very powerful in the short to medium term outlook, right? And you layer that with the projection of future cash flow, particularly based on seasonality. So when we looked at our experience of building similar things in Grab and Solvik has experienced previously other platforms, we figured that cash flow itself is powerful enough to power a credit model. You don't need to know the assets of the owner and P&L of businesses who don't actually know what their P&L is, because these are micro small businesses. So rather than asking for pointless information that they don't even know what it is for, we could just use cash flows. So we use that. But now with Seedflex, we get this information by working with a set of partners. So we don't necessarily directly go to the merchant and ask for this information. We work with partners who happen to have this information because the merchants work with them, whether they're online marketplaces or payment service providers and such. And through those platforms, we reach out to the merchants. So this micro small merchants discover our product, which we call pay as you sell advance, through their partners. And once they take the advance, they pay back from their future sales. Again, same principle. Every time you sell, every time you settle, some of your money comes back as repayment, good for both sides.
Such a smoother way to plan a business instead of having to work around, a steady monthly repayment cycle. If you've used that money to invest, in stock that you're then going to sell over the time, you're going to make a nice profit, but it's going to take time to happen. Traditional loan would really get in the way of that. And talk to me about how quickly this information is cycling through. So from the moment a transaction happens, how quickly is that able to be incorporated into your loan decisioning? How quickly do you see what's happening within the merchant's business and have that available to your models to influence a decision? How quickly does the real business translate into the digital approximation of the business that we use in analytics?
A good starting point is daily. Daily sales, daily payment settlement is a key input into cash flow variable creation. Now that manifests in a few different ways. Obviously, recency of that sales carries a greater weightage. It has influence over limit. So one of the things that we have done with pay as you sell advance is it's essentially a dynamic credit limit. So if you're selling more, yes, your limit reflects you're selling more, and vice versa, right? It's not a typical, you come with 30 pages of document to underwrite, which goes back into 10 years of history, and now that I've underwritten you for next 6 months or a year or two, and maybe forever, I never look at you again. This is not that model.
Yeah.
So whenever we've underwritten, whatever limit we've given, the data feeds are essentially at least daily. Now, obviously, it depends on the integration with the platform and how many platforms you work with. The richness of that data has an effect on how quickly we calibrate the credit limit. But the credit limit for now, we update only monthly, with the exception of obviously you have drawn down a certain part of your advance and hence the available limit goes down. Or maybe there are repayments.
The old models So they worked for a salaried employee where you get paid every month, you repay every month. But even for big established businesses, every day they're making sales. And sure, if your business is big enough, you've got a whole accounting department to keep in line how much money comes in each day and keep a part of some of that to pay your loans. But the outflows for loan repayments never match the inflows. And as you said, you're talking about things like seasonality, right? That didn't get accounted for in the regular pay us every 12 months cycle. So we had all these rigid bits and pieces that were legacies, either that someone had never thought to fix or were there because systems used to be a lot more clunky and hard to make flexible, that just got carried through into our modern world. And now we're seeing, no, actually, things that happened yesterday can influence a loan that's made today. And this is why, I've said this many times on the show. This area is so exciting for me in lending. So even just in the last 10 years, I remember working on projects in the crossover between consumer and small business. And the small business was very much more of an accounting exercise, very little hard data analytics going into it. And all of a sudden, never mind consumer lending, this is where all the exciting stuff can happen because there's so much data so quickly. I was on Seedflex.com a bit earlier, and I also noticed that it's a Sharia compliant product, which is obviously important in the region. You're based in Singapore, so right next door to Indonesia, home to the largest Muslim population in the world. Brunei and Malaysia, two Muslim majority countries too. So two things there, I guess. First, was that a sort of a distinct design decision up front? And then two, as I said, you are in Singapore now. As you look around the region, what areas are you serving today? What areas do you think you'll be serving in the future?
Sharia came naturally to us because of our past experience that Sharia in many ways stands for ethical, customer-friendly terms of finance and financing. As a Sharia construct, we are a fee-only product, and that too is a single-time fee because the technical structure of the product is trading rather than financing that bears interest, late fees, and any of that stuff. And looking at the current supply of credit, we understood that a lot of what has been offered still is, I won't say predatory, but it has 5 different types of fees. It's got a repayment fee, early repayment fee, late payment fee, very late payment fee. And none of that is positioned transparently to micro small businesses or micro entrepreneurs. And that's one thing that with Grab, we learned to take it head on and stand for something, which is transparency, very clean, honest communication of what this is going to cost you. If you as a borrower don't know what it is going to cost you, then as a lender, we have failed you. So Sharia allows us to really package that and communicate that because Sharia anyway doesn't allow for different types of fees. So that came naturally to us as a design choice in Malaysia. And potentially, as we think of entering Indonesia, it would be again the same principles that we will follow in.
Yeah, and I think as a non-Muslim and having no real exposure to Sharia lending in the past, all I knew of it was, interest is not allowed. But with this show, what I've realized is that, there are a lot of these principles of fairness and transparency that are actually now being picked up in secular businesses. You talk about consumers going over limit, then getting hit with an over limit fee, which then puts them into overdraft, so they get hit with an overdraft fee. And then all of a sudden somebody was $5 overdue and they owe $200 in various fees. And you should be able to say, this is our business, we charge you this amount because we believe the value we add warrants that amount. And if you agree, you do the contract and we move ahead. There shouldn't be these things like, haha, you didn't look at the small print. Now you owe us $5 for this or that. So Ritwik, Seedflex.com is a lovely, slick website. As I said, I was on there earlier. But if people are listening and they want to learn more about what you're doing, want to see that journey as those tests come in Malaysia, as you look at your other markets in the region, where can they follow you and the team online?
We are on LinkedIn, both under Seedflex company profile as well as my profile, my co-founder Sovik's profile. We have started our journey and we have shared how we got to this point quite candidly in our recent posts, and we continue to want to do that. Ultimately, what is important for us is to serve the merchant. So as we hear from our micro small business borrowers, and learn a few things. We would love to share that again with the community. Our realization and belief is the opportunity to serve this cashless commerce segment is so huge. And there's just a massive gap between how commerce has become digitized during COVID, how many millions of merchants went online, but at the same time, the digital credit hasn't really caught up. So there is still a huge gap between what is a Shopify merchant's ability to go online and sell in like 24 hours. But what happens to that merchant if she wants credit? It's not going to happen even in 24 days. This gap is huge, and we just want to be part of a solution. By no means any single entity can solve all of it. So we want to share openly on our website, on LinkedIn, and bring in insights from merchants. We want to work with partners who are serving these merchants and can collaborate with us to give us access to these needs and capital and really work it together.
You talk about the millions of consumers, the millions of merchants, the millions of drivers in the Grab example. We've got all these people that have been running businesses, have been living their lives, and those lives are suddenly now digitized. And it's now a fresh opportunity to revisit how we can serve them with any number of products, with credits. But almost anyone listening, the sort of universal impact of COVID means there's not really a market anywhere that didn't experience a sudden leap into more e-commerce, more digital commerce, and a big drop down in cash usage. And what does that mean now that we can see the flows of transactions, money that used to come in? You'd get 100 in your hand, you'd spend 80 of it to put fuel in the car or to buy stock for tomorrow. The 20 you've got left, maybe 5 ends up in a bank. We never saw that whole picture, but now, in many cases we can. Repeating myself here a bit, but these are not new entrepreneurs we've created. This is not taking a risk on new businesses. They've been there and operating, just invisible. Now we can see them. Now we can serve them. So Ritwik, it's been fantastic having you on. Thanks for your time.
My pleasure, and would love to share more as we make more progress and connect the dots across the globe with other similar institutions, interested institutions who want to work with us, learn from us, and we can learn from them. So it's been great being on your show, and look forward to keeping in touch.
I'll put those links that you mentioned in the show notes, seedflex.com or Ritwik Ghosh on LinkedIn, easy to find. And thank you all for listening. Please do look for and follow the show on your favorite podcast platform, and share the updates widely on LinkedIn, where lending nerds are found in our largest concentration. Plus, send me a connection request while you're there. This show is written and recorded by myself, Brendan Lagrange, in Brighton, England. Show music is by I Am Wake, and you can find show notes and written transcripts at www.howtolendmoneytostrangers.show or just www.htlmts.show, and I'll see you again next Thursday.